High earners often feel stagnant because unassigned money inevitably flows toward monthly urgencies, leaving absolutely nothing for the future. Today, we are going to build a goal achievement system, a tool to transform a vague financial wish into a calculated monthly plan. To do this, you need to follow along right now. Grab a pen, a piece of paper, and open your online banking app. Gathering these physical tools and opening your accounts shifts you from passively dreaming about wealth to actively building your financial infrastructure. Step 1. Take that piece of paper and write down the specific financial target you want to hit. We are going to run that target through the SMART framework. That means making it specific, measurable, achievable, relevant, and time-bound. Look at the difference in clarity. On the left, Save Money provides no filter for spending. On the right, save $1,800 for a used car by December 31st gives you exact criteria to meet. Take your $1,800 goal, divide by 12 months, and get a strict $150 a month target. This reveals the mathematical delusion. If the math demands $500, but you only have $150, the goal is unachievable. You must extend your timeline. Forcing a strict deadline and exact dollar amount removes human emotion from the process, leaving you with a solvable math problem. Now that we have the exact timeline for your goal, we need to evaluate where it sits on the financial calendar. This timeline displays goal horizons. Short-term takes under a year, medium-term takes 1 to 5. For these, a standard savings account is sufficient. But for goals 5 years out, notice this upward curve. You must invest to leverage compound returns. Properly categorizing your timeframe dictates the exact financial vehicle, whether it's a savings account or an investment portfolio, needed to safely house your money. Next, we move into the banking execution phase. Automation is the single most critical step in this entire system. Look at your banking app. Create a dedicated sub-account right now and name it after your specific goal. Set up a recurring transfer into that new account for your target amount and schedule it to trigger automatically on your exact payday. Relying on manual transfers and willpower at the end of the month is the primary cause of goal abandonment. When money moves automatically before it is seen, you bypass human temptation, which guarantees consistent progress. Now that your savings are automated, you need a physical tracking system to prevent the goal from being forgotten. This progress bar illustrates your next step. Divide your total goal amount into 25%, 50%, and 75% milestones. Draw this out on your paper and put it somewhere you look daily. Tape it to your fridge or set it as your phone lock screen. Finally, we need to establish system maintenance. Open the calendar app on your phone. Set a recurring reminder for every 90 days to sit down and formally review your progress. Shifting life circumstances and income require goals to be dynamically adjusted during these reviews, rather than kept rigidly until they break. Daily visual tracking maintains your short-term motivation, while the quarterly calendar reviews provide the opportunity for long-term course correction. If you followed along, you just traded a vague wish for a mathematical timeline, an automated funding source, and a visible tracker. By setting these targets, you are looking past the numbers to the actual utility of your money. Achieving a target like a car or a business fund provides the independence, stability, and flexibility to make life's next decisions. This system replaces financial drift with a series of deliberate, repeatable decisions. Go tape that tracker to your wall right now.